Welcome back to CTV Morning Live. Nice, tanned, relaxed.
Thank
Frank
you.
Napolitano joining us from Mortgage Brokers. Great to see you.
Thank you.
You're
Great
nice
to be
and
in.
relaxed.
I am.
You
That's
saved
what a
all
holiday
this.
does. That's what a holiday does.
With money that you saved from not buying into so many of these gimmicks that we see from the banks.
And a lot of customers get caught up in these gimmicks, and banks are very good at it, just like dealerships are, and you know, there's a whole bunch of fields out there. But there, you know, when it comes to banking and your mortgage, there are some cashback mortgages you hear about, and it's not always about, and I think the interest rate's the most important thing, but do your math on them. You know, and I sent you an example where a $300,000 mortgage, and there's a bank that's offering a little bit of a cashback, plus they also give you $100 every quarter. They put it in your bank account. It sounds very intriguing. Wow. But when you look at the interest rate that they give you on that mortgage versus the interest rate that you can get by just not taking any of those cashbacks, over a 5-year period, it's a difference of over $6,000. So it's a lot of money. Yet, when you look at that offer originally, it sounds very intriguing. Wow, they're going to give me money every 3 months.
Every 3 months, they're going to give you some money.
$100. They're going to put $100 in your account, which is nice, but you're paying $250 in the interest rate differential between the interest rate they're giving you versus the interest rate that you can negotiate on your own.
How often do you see clients run into this? Because it does sound, it sounds fun. People always hear cash back. They hear money being put back in. So how often will you look at a client coming in and say, you've just been caught in this trap?
More often than not, because typically we get the customers, and we won't see them as often, I think, in the coming years, but 3 years ago, 4 years ago, the cashback mortgages came with 5.5% mortgage rates, which at the time was pretty good. But now they're looking at what rates are now, and they're calling me and saying, Frank, I'd like to get out of my mortgage. And I say to them, you got to call for what your penalty is. They'll call me back, and they'll say, I called the bank. The interest penalty is this amount, but I also got to give them back the cash back now. So they want the cash back as well. So all of a sudden, it's not worth it to get out of the mortgage because now you're stuck in it for the entire term. So
if you're stuck in one of those mortgages, you're pretty much stuck because the penalties are going to be a little bit too hard to handle.
The penalties are hard to handle, but what makes it even more tough is the fact that you got to give the cash back to the bank. So
there's different ways of looking at this, especially for people who are heading into a brand new mortgage at this time and are trying to make the decision as to where to go.
Do the math, and if you're not comfortable doing the math, feel free to call, you know, ourselves, Mortgage Brokers Ottawa. We'd be more than happy to do the math for you and make sure that you're making the right decision, because it's 5 years. We're not talking about a year. These mortgages typically have terms of 5 years, so you're stuck in it for 5 years and cannot get out of it in many cases.
Would it make better sense at a lower mortgage? I mean, does it make any difference if you're carrying a mortgage of $300,000 or $150,000?
Difference between a 384, which a lot of these mortgages, like just a small, this specific one that I talked about is 384, but when you look at a standard cashback mortgage, a lot of them, now, I'm not taking away the fact that some cashback mortgages are good. First-time home buyers that can't save up the down payment but have excellent jobs, excellent credit, there are 5% cashback mortgages out there that allow you to get into the housing market. Those ones make some sense, and the interest rate that comes with it is 5.24% in that range versus a 3.19 for your typical, you know, discounted 5-year mortgage. There's a big difference there, but it gets you into the house, and that's the difference as opposed to, so I think some cashback mortgages are good, but if you already got an existing mortgage or you've got a sizable down payment or your own down payment, do the math on it, because if you truly do the math on it, you'll see that you're better off to take the discount than to take any of the cashbacks.
And
more money in your pocket.
That was the thing. It was more money back in your pocket, and the numbers were really quite staggering.
It's family vacation. $6,000. Take a family vacation. Go down south, relax like I did.
No. Well, thank you. Great information. Great to see you once again. Nice and rested.
And happy Valentine's Day to everyone.
Absolutely. And by the way, check out their mortgagebrokersottawa.com. Plenty of information, and just be able to get the information before you find that you might be stuck in a trap, or you want to make the right decision for you in the long run. We're going to take a commercial break. Plenty more to come here on CTV Morning Live. Your 7:30 headlines coming your way.